Okay, right now, I want to talk a little bit about forecasting because forecasting is actually very, very important. It's one of the most important things for you to do on a daily basis because if you don't forecast on a daily basis, you're basically taking trades out of thin air. Like maybe you thought about this trade 5 minutes ago because you saw a market shift and you are not okay with any sort of outcome, right? And what I mean by that is that a lot of trades they come into the market and they are reactive instead of being proactive. And what I mean with being proactive, I don't even know if that is the right word, to be fair, but basically a lot of people, they wait for the market to do something and then they forecast, right? When as a trader, when you understand the daily bias, when you understand the power of three, when you understand the whole strategy that I gave to you, the number one thing you have to do is forecast. Because by forecasting, you will be able to actually, before the market opens, understand exactly what you want to see in the markets. Okay, I expect the daily bias to be bullish. So I want to see a bearish power of three. And then I want to see the market shifting bullish after London manipulation, and then I will execute. But a lot of people, they wait for all of that to happen, and then when you have the market shift on the daily or on the power of three or on the London session, they're like, holy fuck, yeah, right now, let's execute. When sometimes you see exactly what you want to see, yet you wouldn't have a trade. Because not every day is a trading day. So for example, here you can see beautiful power of three in the move to the downside on euro dollar, right? But this is not a trading day because today is going to be FOMC. And so let's imagine that today is not FOMC, right? Let's imagine that today is not FOMC. Then I would come into the day thinking, okay, let's say that the market hanged around here overnight, okay? So what I would be forecasting is I want the market to come towards the fair value gap, to the inverted fair value gap, and then I expect the market to go lower. So you ask yourself, where do I expect the market to go first? Where do I expect the market to go after? Right? That's what you ask yourself. And so to me, the target for today, it would be the 50% of this wick. Why the 50%? Well, 50% of this wick. Actually, really just the beginning of the wick, anywhere around the beginning of the wick and the 50%. And the reason why is because you want a target that is very likely to get reached and it's not too far away, right? So this is a 30 pip target. If you enter with a 20 pip stop, you still have a 1 to 1.5. If you enter with a 15 pip stop, you still have a 1 to 2. In the market, usually it's not really just going to react out of the wick. It's maybe going to go a little bit lower, and you're also not going to catch the high, right? So I have to be devil's advocate in that. So what I would do is I would take a screenshot of something like this, like that, and then I would go on to the 12-hour, and I'll be like, okay, I expect the market to move higher. Sorry. Let's go 12-hour. Exactly where it was. Okay. So I expect the market to move a little bit higher. So we have fair value gap right here, and we have this inverted fair value gap. So what is that? That is a BPR. So you expect the market to move higher and to move lower. And so you do something like that, and you take a screenshot, and you post it here, let's say on the 12-hour right here. So 12-hour, there you go, post a screenshot. 4-hour, same thing. 4-hour, you can keep the same thing. You would probably mark out the highs, for example, right there, mark out the highs. Everything remains the same. So let's do this. Then 1 hour. On the 1 hour, you can go into a little bit more detail. So on the 1 hour, you'd possibly say something like this, where I expect a little bit of a range, followed by the sweep, market moves lower, and this is when I start executing, right? Because on the high time frame, you just mentioned the area you would be interested in executing on. But once you get into the lower time frames, we're talking 1 hour, and I will tell you why you should never go to the 5 minute once you are forecasting. That's when on the 1 hour and 15 minute, that's when you actually start marking out the market going towards those areas, shifting, and then you mark out where you would execute, right? So that is exactly what I would do here. So this is reversal trade, continuation trade, right? So let's go back, take a screenshot, copy image, and onto the 1 hour. Then 15 minute, same thing. Same thing on the 15 minute. You don't even need to actually forecast the 15 minute unless we are actually doing it as London session is approaching. So if we quickly go to London session approaching, you have right here, let's actually go back to, okay, this is London session. Okay, so what you would do is like, okay, now this low is gone. So if this low is gone, I expect range bound price action. So the market either sweeps this high or it's just going to range. So either sweeps the high and starts forming bearish order flow, in which I would execute. And here is a no trade zone. So this is something that you would do. Boom. That's it. So then I need you to write down a little bit of your forecast. So bias is bearish because we have the first. Bias is bearish because we have the first indications that the market is moving lower through the daily inverted fair value gap. I am not married on any bias because the overall structure switched bullish. Bullish externally. We are now bullish and bearish at the same time. We have now swept the Asia lows. So most of what I'm going to be doing is waiting for the market to shape. If that doesn't happen today, it's completely fine. I am waiting for the market to show me cleaner price action. Right? So bias is bearish because we have the first indications that the market is moving lower through the daily inverted fair value gap. I'm not married to any bias because the overall structure has switched bullish. And what I mean is that right now we're stuck in this bearish PD array, bullish PD array kind of scenario. So I want to see a little bit more confirmation. And so if the market hasn't done that in this specific time period, well, if the market does not show me any sort of confirmation, most of myself is probably going to be waiting for clean price or a very, very nice entry, or waiting for just confirmation that it wants to go in one specific direction. Because again, we're stuck between bullish and bearish PD array. So with that being said, let's go on to the next one. We are now bullish and bearish at the same time, exactly what I said. We have now swept Asia lows, so most of what I'm doing right now is going to be waiting for the market to shape up. If that doesn't happen today, it's completely fine. I'm waiting for the market to show me cleaner price action. Because again, a lot of people, what they would do is they would come into the markets, they would see this sort of price action, right? They would see the price action now starting to move lower, and they would be like, oh my God, it's time to execute, it's time to execute. Okay, we swept Asia lows, so it's time to go long. Not understanding that first, you need a higher time frame narrative. You need session liquidity narrative. You need so many things that you can't just be reactive to what the market is doing. The market is engineered to actually take you out, to actually manipulate you. And you are not coming prepared. Like seriously, why are people not forecasting on a daily basis? The market is done in a way that the number one goal is to get your orders, to make you lose money. Why do you think that 90% of traders fail? Do you think that 100% of traders backtest? You think 100% of traders forecast? You think 100% of traders stick to their plan? Absolutely not. So forecasting is about you knowing what to expect from the market. And if it doesn't give you that, you move away. Right? So my idea was, okay, let's wait for the sweep of the equal highs, and then I want to enter in the short. Well, that did not happen during London session, right? London session just opened and moved bearish. So if that is the case, then I'm not executing. It's that simple, right? So when I see this sort of price action, and I know, especially today, I know it's FOMC, I'm just not doing anything. And if the market does move in the direction that I expected, then great. I forecasted the daily bias correctly. Yes, I didn't execute, but that's next time. When the market provides clean price action and clean direction, then I'll execute. But so many people are so reactive in the market. And listen, you need to make your forecasting process very, very simple. You notice, I just screenshot daily, 12 hour, 4 hour, 1 hour, 15 minute. I took 5 screenshots. I didn't go and say, oh, fucking the market has to sweep this high and that is session liquidity and then no, it was just I expect the market to go here and then there. This is how I expect the market to go there. So many people, like especially smart money concept traders, they think they have the algo solved or something. And so they write 50 paragraphs on one fucking forecast. It's obviously that no one is going to watch that forecast. No one is going to do that forecast long term. You need something that is simple, that you can repeat every single day. That's what you need. You don't need this crazy, oh, fucking, the market swept this and that means that retail traders are now out, blah, 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 blah. It's just price. It's just lines on a chart. Nothing really matters. You need to take trading seriously, but not as seriously to the point that you think that you are trading like the banks. You're not. So when I say this, keep your forecasts simple. Keep your forecasts simple, right? Notice daily. I only have arrows, basically. I can do this with arrows or I can do this with a scribble. Same thing here. I expect fair value gap, move lower. Same thing here. Fair value gap, move lower. Same here. Move lower, right? This is all scribble. On the 1 hour, you can get a little bit more specific on the actually entries that you would want. And then last but not least, on the 15-minute, you can go a little bit into more detail. Why don't you want to do it on the 5-minute? Because the 5-minute is too many candles. The 5-minute has too many candles for you to forecast accurately. Because the market has to be so specifically right to what you want to see. The 15-minute is way easier to forecast. You're going to have 3 times less candles on the 15-minute. So the likelihood of what you're forecasting playing out is way higher. A lot of people, they seem like they're doing the forecast like they're doing the lotto. It's like, yeah, then I want the 1 minute to do this, this, and 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 this. It's like the more numbers you have to say right, the higher the likelihood of it not playing out. Right? So think about this. You forecast the daily, you forecast the 12 hour, and let's say all of them give you a 70% chance of actually playing out. Once you're at the 1 minute, the probability of your forecast playing out is like what? 3%? So what? You want to execute once every 30 days? No. So keep your forecast simple. Think about the areas where you want to execute from and ask yourself the questions. Where do I want the market to go first? Where do I want the market to go after? You did this before London session and you will see your trading change forever. So keep your forecasting process very, very simple. Do not overcomplicate, right? And so that is how I forecast. That is how I stay ahead of the market. If you guys want this specific forecasting template, then make sure to check the first link in the description. That is where you'll get all of the resources. That's basically where I put everything. So hope you enjoyed. See you in the next one. Peace. Hope you enjoyed this lesson. Click right here to watch the next one. And if you are struggling with overtrading, then click right here to check out Trade Blocker. Peace.